We now welcome the Grab CFO, Peter Oey, joining us on the back of earnings, which, well, the full year revenue is what many have focused in on. The prediction for this year is $4.04 billion to $4.1 billion. That's slightly below analyst expectations, but some are saying you're conservative. Are you being conservative, Peter?
We had a solid result 2025, Carolyn, and it was an amazing year for us. We achieved some new milestones in the business. We have now 50 million monthly transacting users using our app constantly on a monthly basis. We also showed great profitability in the business, to over $500 million in adjusted EBITDA, but also our first year net profit in the business. As we look at 2026, we're firing on all cylinders, and we are seeing good growth across all the platforms, across all the different products that we have today. We are confident going into 2026 in terms of delivering that new guide that we gave out for 2026, but also we also gave a 3-year guidance also at the same time of 20% revenue growth from 2025 to 2028.
So really long-term perspective here, just dialing in on the profitability side, because you're right, many loving the fact that you delivered this full year profit. What now to really drive up that return on equity? Our Bloomberg intelligence analysts talking about maybe it's the net profit to really be driven higher needs, even more leaning into the fintech side of the business, or some cost cuts. Where do you pull?
Yeah, there's really 3 big pillars when you look at the business today. One is continuing the growth momentum in our rides business, as well as our deliveries business. And our deliveries also, now we have other products and services. For example, grocery delivery continues to be one of our fastest growing. It's actually growing 1.7 times faster than our food business today. We also have dine-in, which is another unique set of product features that brings people to the restaurants also at the same time. Financial services also continues to be our fastest growing segment of our business today. The loan book size that we have today, we've clipped over $1 billion in loan portfolio, and we expect to double that as we finish the year 2026. So we've got all the different products working together to really drive that growth in the business, but also margin expansion at the same time.
Margin expansion at the same time. Would you put any money to work, not only buying back your stock, which of course investors like, and that's helped push the shares, $500 million buyback, but what about the M&A story? Because we're all looking as to whether that deal with GoTo can get done.
We're taking a very balanced approach when it comes to capital allocation. Organic growth is really critical for us, all the things that were just alluded earlier. When it comes to M&A, we're going to have a very high bar when it comes to those particular targets that we're looking at. We announced also this morning an acquisition of Stash, a financial services and investing platform that we're very excited about in bringing also that cohesiveness of investing, but also just not lending, but also not investing into the product portfolio of our business today. So we're going to be very careful in terms of how every dollar we spend, whether it's an organic growth or inorganic growth, and also returning capital back to our shareholders, like you mentioned, the $500 million new buyback program that we announced.
What's so interesting is we're all watching the financial sector, wealth management in particular, an area that perhaps you're looking to do bolt-ons and expand into, really get disrupted by this age of AI. How are you thinking about the acquisition just made? How are you thinking about what you deliver in terms of financial services to your users right now?
Yeah, look, I think the reason why we're so excited about the Stash is the AI product features that they're continuing to get better and better and build. And that's one of the most exciting things as we continue to build also AI features in our products also on the lending side or all across our on-demand business. So it's really complementary. We have a great team there that we're very excited about to bring to the Grab family. And their product, what we find it so unique, is actually for the masses and really serves the mission in terms of democratizing investing and also leveling the playing field in terms of giving access to folks who are not able to invest today. And that's what excites us, but also keeping it simple. And that's where the AI customer experience comes in, that we think it's going to make even investing a lot easier, but also a lot smarter for the average American, but also over time across to our market here in Southeast Asia.
In many ways, AI and our relationship with it is very much front and center when you think about autonomous vehicles. When you're expanding in Southeast Asia, how much is that a conversation? I mean, Uber, one of your largest shareholders, I think about 13% of your free float that owns, they've of course been all in on the AV story. How does it work where you are?
Yeah, look, we're leaning into autonomous vehicles. We are a lot much more earlier than for the folks who are in the US or in other markets today, but we are leaning in as the biggest on-demand player. We have cars that we are piloting in the streets of Singapore today. We're working very closely with the government in piloting those cars. We are hoping that over the next coming months that we can start to commercialize those vehicles and add more cars also on the infrastructure here. But we're taking it very slow and very cautious, making sure that safety is critical. We've done over 25,000 kilometers now with the safety driver in making sure we are getting market adoption. Customers are also understanding it also, but also training the drivers also at the same time and really building an infrastructure. So we're very excited. We're going to use Singapore as a blueprint for the Southeast Asian deployment of autonomous vehicles, but it will take some time for us. We're not rushing it again, just being very cautious and very careful and working with the government and the driver community also at the same time.
Peter, how cautious is the consumer right now in Southeast Asia? How much has that been a headwind?
We haven't seen a headwind actually. If you look at the 2025 performance, Q4 was very strong for us. Demand business on demand grew at 21%. The number of rides was up 27% on a year-over-year basis. Deliveries was up also. It was up 21% for us. So there's a lot of good traction that we're seeing in Southeast Asia. And I think part of that, if you step back, Caroline, is actually the products that we make it affordable. The fact that it's affordable and reliable also is important. So we feel that more users are coming into the platform itself. We've gone to more cities. Believe it or not, we've added 400 cities over the last 4 years in our platform today. And we're at over 900 cities now in Southeast Asia. So we feel that the customer sentiment and the customer demand is robust and it is strong, but also we're making sure our product is affordable and reliable also at the same time.